Singapore state investor Temasek is in the red after posting a $7 billion net loss for the latest financial year, a reversal from the $11 billion gain a year ago. Its net portfolio value also down to 382 billion Singapore dollars, bringing the one-year shareholder return to a negative 5%. Heidi Ng crunches the numbers.
It might be Temasek's worst annual showing since 2016, but that hasn't dented long-term returns. 10-year returns stand at 6% and 9% for 20 years.
These are unrealized mark-to-market losses, so if you were to exclude these mark-to-market losses, then actually our operating profit for the group is about 15 billion. And this goes to the profitability and resilience of the underlying portfolio that we have.
Temasek's portfolio remains diversified, with top 3 markets still in Singapore, China and the Americas. Within sectors, it's also put nearly a quarter of funds into transportation and industrial, including energy and resources. But it cuts stakes in the financial services sector given rising interest rates. Temasek also slowed its investment pace, with net investments at 4 billion Sing dollars, down from 24 billion Sing dollars previously. Unlisted assets make up more than half of Temasek's portfolio, giving it the liquidity to pick up good deals in the event of a market correction. And given the more challenging external environment, Temasek says it's maintaining its cautious investment stance and divesting away from sectors with long-term structural risk.
In a fragmented world, we prefer investing in companies which have access to large domestic markets. Secondly, we have to be prepared for an environment of higher inflation and higher interest rates. That requires us to invest in companies which have strong pricing power. We also increasingly favor companies that have strong cash flows compared to the past.
That's a lesson learned from its failed investment in collapsed cryptocurrency firm FTX last November. It had written down a 377 million Sing dollar investment and cut compensation for its senior management team.
When you have something which affects your reputation, that's when you take action, which might be a little bit more punitive, because you want to remind yourself that every time you do something, the issue is not just the financial risk associated with investment, it is a reputational risk associated with investment. And we take that very seriously. We take our reputation very seriously.
Going forward, Temasek says it's still investing into early-stage companies, such as those that focus on long-term trends like sustainable living. But it's capping their exposure to just 6% to manage the risk.
Analyst CNA spokesperson say the drop in Temasek's net portfolio value is no cause for concern. They add that the contribution to state coffers remains steady despite the ups and downs that come with taking risks. But short-term challenges such as higher interest rates, uncertain global economic environments and climate change, well, they still remain.
We see that pullback as investors sort of reevaluate their portfolio. But I would say going forward, once things becomes a little bit more clearer, it should start growing again. So it will be a case of pullback, growth, maybe a period of steady return and steady growing, but it's really a case of challenging macro environment that will continue to persist.
The whole world's facing the impact of climate change and how that will affect companies, businesses, and their growth potential going forward. But as you can see, they have been investing a lot in sustainability, shifting the focus a lot on that front, and hopefully that will mitigate some of these challenges.